What is up, you guys? Thanks so much for joining me today. It's your boy, the Finance Bro, and in this video, we're going to be taking a look at shares of Applied Materials. We will look at a few fundamental and technical analyses to see if shares are trading at an attractive entry point today, or if investors should wait for a pullback in the name before making their first purchase. As always, this video is not investment or financial advice and is solely for entertainment purposes. So let's dive right in here to the past 1 year price performance of shares of Applied Materials. You can see that within that 1 year time frame, shares have outperformed the S&P 500 by almost 251%. On a year-to-date basis, shares are up 160%, whereas the S&P in that same time frame is up not even 8%. Over the past 1 month, shares are up 55% due to a lot of that memory shortage that I'll touch on later on in the video. But you can see that shares are trading at their 52-week high. When we look at that top share price chart, you can see in the July timeframe that 50-day moving average in the green has crossed over that 200-day moving average in the orange, with shares healthily trading above both averages. That gap between the 50 and 200-day moving average has widened, which does indicate that positive price momentum is still in store, at least in the near term, for shares of Applied Materials. I want to point your attention to that earnings per share at the bottom left. Through 21 to 25, earnings per share doubled, but you can see through 25 and 27, earnings per share are doubling in half the time frame, and that's really why shares of Applied Materials have really re-rated over the past few months due to earnings projections, the earning growth, revenue growth, and even margin expansions that we'll touch on later on in the video. Shares of Applied Materials do pay a very small 0.3% dividend, which does transpire to a $2.12 dividend per year. We can see that sales growth in the bottom right there over the past 12 months has been a measly 3.4%. I do want to mention that Applied Materials has very long sales cycle with a handful of customers at that. So that 3.4% is counterintuitive to the grand scheme and bigger picture of Applied Materials, which I'll touch on later on in the video. When we look at a few profitability metrics here, that gross margin at 49%, net margin at 29.3%, you're not seeing as much of a compression in margins relative to other companies that we looked at in previous videos. That gross to net margin is not even a 50% drop. In other cases, you're looking at 2/3 to, in some cases, 70% drops from gross to net margins. So if Applied Materials in the future is able to expand its margins and have a more operationally efficient business, we should see this transpire to better revenues, better profitability, and overall better returns for shareholders over the long term. When we look at that return on equity at almost 40% over the past 12 months, it has trended down over the past 5 years. There was heavy investment in 22 and 23, I'll touch on later on in the video, and this slight taper off in investments during that time, and just through that heavy investment and having that high returns in the early years and having that taper off is normal, and a taper off at 40% return on equity is very healthy. When we look at a few valuation metrics, that trailing PE at 62.8, the forward PE at 44.5 is not an overvaluation. It is a growth name, but I will say valuation is stretched. Even when we look at that on a 5-year trend, we'll look on later on in the video, but you can see in that small line graph there on that forward PE of 44.5, it is at its highest point in its 5-year trend line, in a price of sales of 18.4 and a price to book of 22.2. That is also an overvaluation. So there is some valuation metric concerns, in my opinion, for Applied Materials. And when you look at that analyst target prices, 32 of them at that, they do have an average price target of $549.34, which does imply a share price decline from where shares traded at market close today of negative 17.76% on average, with the most bearish analyst having a 36.38% share price decline, whereas the most bullish analyst only has an upside of less than 8%. So that risk reward based on analyst price targets is not really there. I will say over the past 8 months, analysts have religiously increased target prices on the name, and yet that share price in that solid blue line has now traded above that dotted line, which is the average analyst price target, which may mean that Applied Materials may be getting ahead of itself when we look at it solely on a target price basis. Let's see. Over the past 7 months, there hasn't really been any sell ratings on the name. We can see in the most recent quarter there has been a sell rating. Valuation metrics, target prices are indicating that it is an overvaluation. So let's see what happens in the next earnings report coming in August, whether shares need to be re-rated, whether that's on the upside or downside, will be dependent on not only the quarterly report of what the company has generated over the past quarter, but its projection for future quarters as well. If earnings per share growth will continue, if there's that demand and supply imbalance, which should benefit Applied Materials. We will wait for that August report. And those valuation metrics on all sides are trading well above their 5-year averages, in most cases at their 5-year high. You look at that forward PE, like I was mentioning before, currently at a 44.5, 5-year high at 44.6, essentially trading at that 5-year high, a 5-year average of 19.5 on a forward PE basis. We are more than double that right now. So Applied Materials is not trading in its most cheapest valuation. Yes, the underlying business and fundamentals are growing, and good things in life come at a price. The real question as investors, what we should be asking is, what is that fair price? And when we look historically, not just on a 5-year trend, but on a 10-year trend at that, Applied Materials shares are trading at their highest valuation metric over that time frame, which should caution investors. If you're an investor in the name, maybe adding to your position right now might not be the most lucrative. Maybe waiting for a pullback to a better valuation may be beneficial. But in saying that, when we compare valuation to its peers, in this case, really, Lam Research is Applied Materials' largest competitor. On a trailing PE, Applied Materials is at 62.8, Lam Research is at a 75.8, forward PE of Applied Materials at 44.5, Lam Research at 50, and better price to sales and better price to book metrics on Applied Materials compared to Lam Research. Applied Materials is trading at a discount to its biggest competitor, which on the flip side may mean that shares are undervalued and there should be a catch-up trade. Or on the other side of that, Lam Research shares may be stretched and may need a revaluation on the downside for valuation metrics to look more favorable for longer term investors. Even though Lam Research is looking more expensive when we compare that to Applied Materials, when we look at operational fundamentals, Lam Research does have that edge. Gross margins of both companies are at 48.7. When we look at net margins, Applied Materials goes to 24.7 net margin relative to Lam Research's 29.1. Better return on assets and equity for Lam Research, and a more operationally efficient business with revenue per employee higher for Lam Research than Applied Materials. So when we look at these metrics, it is not that surprising to see Applied Materials trading at a discount in valuation compared to Lam Research, as in a sense, and I say this very faintly, Applied Materials doesn't have the same fundamentals as Lam Research, which does warrant a Lam Research premium on its publicly traded shares. Again, both are phenomenal companies, and I do believe that the runway for Applied Materials in the future is much better than Lam Research, and I'll touch on that later on in the video. But we're looking at a very profitable company at that. Applied Materials has great gross operating pre-tax and net margins, very consistent over the past 5 years. When we look at those returns on assets, equity, total capital, and invested capital, very steady. In 21 and 22, you did see a very large investment by management of Applied Materials. You were seeing a lot of those returns realized. And now, just through the erosion of time, you are seeing an erosion as well of those returns on assets, equity, total capital, invested capital. Yet, when I say an erosion, you're still seeing the high 30s and low 40s on these returns, which is better than the average in all major indices. We are seeing a very steady operational business with that revenue and net income per employee staying relatively flat over the past 5 years, not seeing any declines, seeing slight upticks, yet still Applied Materials is a very well run business. And you see that in their financials. Look at those 5 and 10-year compounded annual growth rates. Sales and revenue on a 5-year CAGR of 10.5, 10-year CAGR of 11.4. You're looking at amazing non-operating net income, 5-year compound annual growth rate of 47.5%, 10-year CAGR of 41.1. You're looking at earnings per share on a 10-year CAGR of 22% growth year over year for the past 10 years, 5-year CAGR of 15.7% on the recurring earnings per share and a diluted earnings per share basis of 17.2% 5-year compounded annual growth rate for Applied Materials shares. These are very healthy numbers, and we're seeing all these trends on a 10 and 5-year basis as well, trending in the upward direction, which is what we want to see as long-term shareholders of Applied Materials. And with all that cash, we as investors need to ask, what are they doing with all that cash? Well, a lot of shareholder-friendly material. Buying back shares, heavy buybacks every single year. Those buybacks act as a fictitious dividend to shareholders through the returns of capital gains. You're also seeing that improve their balance sheets as well. As shares appreciate, those shares they take off the market are still held in treasury and are appreciating as well. We're looking at dividend increases year over year and also servicing of high interest debt, which improve their liquidity ratios, cash and quick ratios, and so forth. Very healthy and very smart and a very financially disciplined management team of Applied Materials. And I just wanted to include this snippet here. This is as of August 2025. A very important metric there is the US. Now, mainland China does still, to this date, make up the largest portion of revenue, but that US number you're seeing as of August 2025, a 23.1% decline year over year in revenue generated from the US. Most recently, unless you've been living under a rock, we're seeing a memory shortage, a silicone shortage by all the major companies, whether you're looking at the Microns, the Marvells, Broadcoms, and so forth. Applied Materials supplies all these companies with the necessary materials to build these chips, and those companies are primarily based in the US. So we should, in the coming quarter, see a big boom in revenue derived from the US, which is something we want to see as investors, as we're not tied through the geopolitical risks that come with investing in mainland China and Taiwan as well. Essentially, almost half of the revenue coming from those two regions alone. South Korea through Samsung and other companies, Samsung being the largest customer in South Korea for Applied Materials, still does make up a large portion and will continue to make up a large portion of revenue as well. But a number that we should keep an eye on in the coming quarters is US derived revenue, which in recent quarters we have seen an uptick in, and we should continue to see an uptick with that supply and demand imbalance in the memory and silicone space. Now, with all that being said, I do believe it's important for us to take a look at a few bull and bearish points. I'll start with the AI supercycle that we're currently in. Management expects the semiconductor equipment demand to grow by more than 30% this year alone. The shift toward agentic AI systems is driving a need for more sophisticated, high-performance chips, which in turn fuels demand for Applied Materials' specialized deposition and tech tools. We saw strong financial discipline and execution from management through share buybacks, servicing debt, and increasing dividends. Now, the company recently reported record breaking performance with non GAAP gross margins finally crossing 50% in its most recent quarter for the first time in over 25 years. This reflects management's value based pricing strategy, solving complex manufacturing problems that competitors cannot easily replicate, creating a moat for the underlying business of applied materials. What we like to see is the broadening of revenue streams. For example, the applied global services segment is growing at a mid teens annual rate, bolstered by the company's AIX software platform, which is now connected to over 35,000 chambers. This provides a more predictable, recurring revenue stream, and institutional money is still backing the name, even though we saw average price target actually having shares decline 17%. Applied Materials satisfies both value, dividend, and growth mandates. So a lot of these managers, whether they're running separately managed accounts, ETFs, or mutual funds in the growth, value, or dividend growth segment, need to purchase applied materials. And just through these fund flows of institutional money, applied material shares should see boosts each year going forward. Now, we did see those valuation concerns that I'm not going to touch on again, but a primary concern is that clean room capacity for applied materials might be built out faster than chip makers can fill out. This leads to a temporary slowdown in orders in 2027 or 2028. This could compress a multi-year spending cycle into a shorter, more volatile window, creating supply chain imbalances. Right now, there is a significant demand for these products. Spending is not slowing down, but this is the number one concern and overhang of shares currently. And if that slowdown comes in 2027, well, shares will readjust as quickly as they did on the upside to the downside. And finally, like I mentioned in the previous snippet, China remains a significant portion of revenue, like we saw just over 24%. As of the most recent quarterly data, that has not changed from that August 2025 snippet that I have provided. Should export controls tighten further or trade tension escalate with China, a major portion of the company's revenue could be structurally threatened. These are risks that investors need to be aware of. The valuation concerns, in my opinion, is the biggest overhang in the stock. Fundamentally, the company is phenomenal. You are still seeing applied materials capitalize on supply imbalance and the increase in demand. But hey, let's see what happens, especially in the upcoming quarterly report in August. Investors should keep an eye on that and see whether they need to readjust their thesis for applied materials on the upside or downside. Time will tell, but I do thank you guys for making it to the end of the video. Please do hit that like and subscribe button and stay tuned for the next video.